I visited Alibaba, Tencent, Huawei, and Xiaomi, three of China's largest digital companies that many Americans had never heard of, but that were expanding at breakneck speeds because of the country's new generation of tech-savvy people who were driven by work. Before the epidemic, China's economy was booming, and everyone was speculating about how long it would take to overtake the US as the largest economy in the world. China's economy was expanding at an unstoppable rate, with businesses making enormous profits and investors from all over the world thrilled. However, things changed when once unstoppable tech executives like Jack Ma abruptly disappeared from the public eye. Now, the economy is slowing down, and many businesses have either left or scaled back their operations in China. What went wrong? Let's examine the specifics to see how China went from being a global economic powerhouse to having significant difficulties for a considerable time. From the 1980s until about 2010, China's economy was growing at a breakneck pace, sometimes by double digits, and occasionally by 10 to 14% annually. This was primarily due to factors like cheap labor, as many multinational corporations established factories in China to take advantage of lower wages, and government investment. China invested heavily in constructing towns, bridges, roads, and airports, which fueled economic expansion and, of course, exports. China emerged as the world's factory, manufacturing goods at a fraction of the price that other nations could. Businesses were swarming to China, which produced everything from iPhones to shoes, and it appeared that everyone benefited. China got jobs and growth, and businesses got higher profits. So what went wrong? Fast forward to today, and China's economy is no longer growing at the same pace. In fact, in 2023, the country's growth rate was just 5.2%, less than half of what it was a decade ago. While 5.2% doesn't sound that bad for China, it's a major slowdown, and several factors have contributed to this shift. First, the real estate crisis. A big part of China's growth came from its booming real estate sector. For years, China built entire cities anticipating growth in demand. Real estate prices skyrocketed, and people believed that property values would just keep going up. But then things started to unravel. In 2021, one of China's biggest real estate companies, Evergrande, defaulted on its massive debts. The company owed more than $300 billion, and its collapse sent shockwaves through the economy. Many other real estate companies are now struggling, and the property market is largely in decline. For a country where real estate makes up 30% of its GDP, this is a huge problem. As home values fall, so does the wealth of millions of Chinese citizens, and people end up buying fewer houses. Although construction slows down, it eventually hurts jobs and growth. There was also a significant event that drastically altered China's trajectory: the COVID-19 pandemic. Like the rest of the world, China was severely affected by the virus, but China adopted a very strict strategy to contain it, locking down entire cities for months at a time. Yes, these measures helped control the virus, but they also had a negative economic impact. The third factor is the aging population. Decades ago, China implemented the one-child policy to control population growth, but now the country is facing the opposite problem: not enough young people. In 2022, China's population shrunk for the first time in 60 years, meaning that fewer young workers means less labor for factories and companies, and a greater burden to support the growing elderly population. And there are also rising labor costs, making China less appealing to businesses trying to reduce production costs. Instead, nations like Vietnam, India, and Mexico are emerging as the new manufacturing hotspots, because they provide lower wages and a more business-friendly environment. As labor costs rose, firms started to reduce or relocate their production. For example, Samsung stopped its smartphone factory in China in 2019 and shifted its manufacturing to Vietnam. Since then, Adidas has shifted a large portion of its shoe production from China to nations like Vietnam and Indonesia, and Apple has been moving some of its iPhone production to India and Vietnam. Businesses are now depending less on China. Another important consideration for the US is the trade war between the United States and China, which began in 2018 and has hurt China's economy. Both nations impose tariffs on each other's goods, making trade more costly and reducing China's ability to export goods to the US, one of its largest trading partners. Businesses experienced uncertainty as a result of the trade war, and to avoid being caught in the crossfire, they had to re-evaluate their supply chains and shift production outside of China. The Chinese government has been cracking down on its largest tech companies, which has alarmed investors. In 2021, China began enforcing stricter regulations on companies like Alibaba, Tencent, and Didi. The government claimed that these measures were taken to protect consumers and stop monopolistic practices, but many people think that the government's true objective was to gain more control over the private sector. The crackdown destroyed billions of dollars worth of value from China's stock markets and made foreign investors wary of investing in Chinese companies. Alibaba founder Jack Ma famously vanished from the public eye for months. His company was fined $2.8 billion, and the government forced another one of his companies to halt its highly anticipated initial public offering. IPO investors became alarmed because it's difficult to trust a system where regulations can change suddenly. China has long suffered from pollution, and although the government has worked to cut emissions, this has resulted in a scarcity of energy. Production delays and factory closures make it difficult for businesses attempting to lower their carbon footprint and enhance their supply networks to deal with China's environmental issues, especially power outages. These outages, intended to lower carbon emissions, have caused production delays at Tesla's Shanghai plant. What will happen in China next? Even if China's economy is still among the biggest in the world, it's evident that its growth narrative has encountered some significant obstacles, including the aging population and the real estate bubble. International companies that were once China's source of growth are now reconsidering their plans, with some even pulling out entirely. Rising labor costs and a more difficult business environment make it difficult to see China growing the way it once did. In conclusion, while China's economy once surged at an unprecedented pace, it now faces significant challenges, including an aging population, a real estate crisis, rising labor costs, and global trade tensions. While China will remain a key global player, of course, China will continue to play a significant role in the world economy, but it's obvious that the days of unrelenting fast growth are over. For investors and businesses, China's slowdown serves as a reminder that no economy is immune to difficulties, no matter how large or successful it once seemed. Perhaps the China story serves as a reminder to all that the global economy is constantly changing, and even nations that seem unstoppable can encounter unforeseen difficulties. However, please share your thoughts on the China growth story and whether you think its growth will ever resume. While you're at it, check out more of my tech and economics videos, and don't forget to subscribe.